Good morning and welcome to the Orlando Real Estate Buzz. I'm Brendan Rendo with the Homes in Orlando team at Next Home Neighborhood Realty and joined by Joe Zaftian of Apley Home Loans. You made it through. Congratulations. Joe completed an Ironman race up in Tennessee this past weekend.
I completed is a strong word. Survived might be a better word. I'm here. It was brutal. It was great. Like I mean, it's always in my family was there. My parents, my wife, my kids. So they got to see me cross that finish line, which just made it that much more.
That's awesome. Congratulations. That's a feat. That is a major feat. Major feat. Well, let's break into what's going on. So, of course, we got the government shutdown going on. Job numbers came out earlier this morning, kind of flat. Consumer confidence is weighing a little bit overall, And then let's see what people think the Fed's going to do coming up here in a couple of weeks. So we will take a look, and welcome to the Orlando Real Estate Buzz. Okay, Joe. So big news, of course, is the government shutdown, which I always love how they put it, shut down.
Shut down.
While they're still running. All the non-essential workers are not working.
Yep.
Which I always find hilarious. I'm like, okay, if they're not essential, why do we have them in the first place? I mean, how many non-essential employees do you have?
Maybe one. I don't know.
Yeah, it's just the way they phrase stuff. It's just it kills you. I mean, it absolutely kills you. But of course, you're getting a lot of questions from people, which really is kind of more on your side than it is mine. What's going to happen? Am I going to be able to close? Am I going to be able to get my mortgage? Getting those types of questions from a lot of people. Yeah. So is it going to change that much on your side?
I don't know. Maybe.
Yeah. No. I didn't think so. I think the only thing we may see is some rate volatility with the bond market. And the one place where you may get affected right away is if you're in a flood zone.
Yeah, flood zone. Yeah. Well, I mean, there is a lot, right? Like USDA isn't doing stuff right now. If we need tax transcripts or Social Security verifications, those are all impacted. But we have workarounds for all of those, if that makes sense. So it's like it impacts us, but it doesn't stop business.
Yeah, good. It was funny. One of the things that I saw as an impact was we may not be getting our government economic data. I'm thinking, oh, good.
That might keep things less volatile.
Yeah, it's like, so we may get some actual accurate numbers. It's just the fear mongering that goes on. It's just it's absolutely amazing.
Yeah.
So that's going on. But some of the bigger things, and this all kind of ties into where we're headed with what's going on with investors, is we saw another drop in consumer confidence with job concerns going on. So we have that, and then we had our jobs numbers come out today, but they really weren't bad. They were kind of flat. Had a decrease of 14,000 on new claims, and the long-term claims, we're sitting, I think, about 1,000 difference from last week. So not a super big change going on out there, but it's still leaving a lot of fear for a lot of people. And I think that may be the one thing that's kind of pushing people to hold back a little bit more on buying their houses. It seems like there's some concern. Orlando's unemployment has been fairly actually extremely low, below the national average. We still have people coming in. I have read of some layoffs here, some layoffs there, but not super big numbers.
Mm-hmm.
Nothing like super big. But all this uneasiness, I mean, really for the past year or so, I think in the economy has led to this, which I didn't see. And this article came out this morning from Bigger Pockets, which is a group that really focuses around investors.
Mm-hmm.
And we're seeing that investor purchases are surging, even despite the mortgage rates. Because a lot of people, I think, need to understand that investor rates are totally different than what an owner-occupied rate is. And it's never going to be lower than what a primary loan is going to be. So what's the difference that you're seeing right now?
Well, it's actually really interesting, right? Investor loans, like the different DSCRs and stuff like that, are probably within 1% right now.
Okay.
It used to be a little bit bigger margin, and it's kind of compressed because the investor side of things was too big and too much of a spread, and the numbers didn't work at the higher interest rates. So I felt like on the investor loans we saw it kind of compress a little bit closer.
Mm-hmm.
Yeah, usually right now a lot of loans around 1% to 1.25%. Now there's usually cost like for that rate versus where you might not have cost for the rate on a primary.
Mm-hmm. But according to this article, we've seen a surge that nearly 27% in the first quarter of this year of homes purchased were from investors. That's up 8.3% between 2020 and 2023. That's a pretty big increase overall. So what that's kind of telling me is it probably is a good time to start looking to buy, because where do investors want to buy? They want to buy at the bottom of the market.
Yeah.
So if investors feel that there's more opportunities out there, that this is the time for them to start going back in and start buying more homes, as a buyer, instead of looking at it fearfully, I'm thinking, okay, if these guys believe that it's time, then maybe it is time.
Yeah.
And I actually found one of Warren Buffett's quotes that I really love, that I think kind of explains it, is be fearful when others are greedy, and greedy when others are fearful.
I like it.
There's a lot of fear in the housing market right now. A lot of fear from borrowers, a lot of fear, our price is going to continue to go down. So it goes through to a lot of things in life. Is a lot of decisions are made out of fear. A lot of decisions aren't made out of fear to jump ahead. So in this case, it's like, don't be fearful. It'll work. It'll work out. It all balances out over time.
Yeah.
And I just thought this one actually is a good explanation of what's going on today. So if you're thinking of buying, now really could be a great time. Rates have leveled out; they're down lower. Prices are still pushing down, and you'll see from the numbers we get this week that people are still negotiating much better rates overall than they have in the past.
Yeah.
So that's that I just found interesting this week. Then we got some other things going on in the background in the real estate industry. Our good friends at Zillow,
Interesting.
getting sued again for trying to create a monopoly again. So if a lot of people don't know, big news that had come out is, Zillow and Redfin basically kind of, what was it? Really was kind of a merger, or, mutual agreements, taking over. And the whole concept on this one was, with the rental market, Zillow was going to provide Redfin all the information, it would help expand what consumers can see. Because Redfin, like a lot of these sites, own multiple websites.
Mm-hmm.
So, like a lot of people don't realize that Zillow and Trulia are the same thing. They're actually the exact same company. I think they also own Movado. I think there's another one that they own. So they own several websites. So the whole idea of this was everything was going to be centralized and then distributed even further out to more and more people. Guess what? No.
FTC doesn't like it.
No, they kind of cut the feeds to the other sites, which I can kind of attest to because I handle some corporate rentals. And when you go in to fill out the rental information, the feeds, you see the feeds that go out from Zillow, none of it says it's going to Redfin. None of it says it's going to the other sites whatsoever. And you have to go in, and I think it's apartments.com is one of them. You have to actually go in and fill out all the information all over again, where it's supposed to be an automatic feed.
So they're making it more difficult. Okay.
Yeah. So where you may like this one site, just that's functionality, and you're looking for a rental property, it's not there. But you go to Zillow, and guess what? It's there. So Zillow's got this one, and they got a couple others that are brewing right now.
Interesting.
So they could be taking some big hits overall. And then overall with the market, like we said, interest rates holding pretty steady. We've watched this 10-year Treasury over the past week really kind of float between 4.12, 4.09, right in that area. You haven't seen big fluctuations in rates, have you?
No, not really. Nothing over the last couple from last week to this week. It's pretty stable.
Pretty kind of nice, kind of quiet.
I like quiet.
Yeah, so do I. But that was interesting because last week we had seen a drop down to 85% of people thinking that the Fed would cut rates. Mm-hmm. And this week we're right at 99%. So a lot of people feel that the Fed is going to cut rates. I think part of that is the shutdown.
Yeah.
Part of it is the job market feeling very flat overall. The PMI came out, which is the manufacturers index, and it wasn't as strong as it was the month before. The month before it was 53, it dropped to 52. But according to that number, we're still in an expansion, but it's a slower expansion than it was previously. So I think everyone kind of feels like it's a slowdown. And I've listened to a couple of people say that the only thing keeping the U.S. from an actual recession is the AI bubble that's going on right now. And then that's where all of our juice is coming from. So right now, it looks like we probably will get another 1/4 point drop. Will it affect rates? I don't know. I don't know. You're not seeing the 10-year take a dip right now with that anticipation.
Yeah, that's something we typically would. So I think we will. I mean, we still got a couple more weeks, right? It's end of the month.
Yeah, end of the month.
I think maybe we start to see the 10-year, if we are going to see rates start to see a positive trend, maybe 10, 15, middle of the month, we start to see it drop down. But, if you look at the first one, we saw almost a full month rally on rates for that first Fed cut.
Yeah, I think part of that was the big anticipation of we're finally going to get a rate cut.
Yeah,
because we had waited so long for that rate cut that that, like you said, that anticipation really pushed a huge rally in the bond market thinking, holy cow, finally we're going to get this. We're going to get this.
Mm-hmm.
And it's like anything. It's like you finally get it. And now it's like, okay, yeah, I got it. Yeah.
Yeah. Is what it is. We're good.
Yeah, we're good. Are we going to get it? Is it going to get any better? I don't know. But so we'll keep an eye on that, see where it goes. But overall, a nice, steady mortgage market is always nice.
Absolutely.
And
I'm
then
curious, before we get into the numbers, one thing that is going to be interesting, we talked briefly, is we had the unemployment, right? It was lower. But I noticed something that they were talking about, like I saw something where the number of unemployed versus the number of job opportunities out there or openings was now lower than a 1-to-1 ratio, meaning that there was less openings than there were unemployed.
Yeah.
Typically, that, generally speaking, not good for unemployment numbers, but it's good for inflation numbers.
Yes.
So we could see, I think that could be something that really leads to, and I think that's why we saw the numbers jump so much on the to 90+% for why we think another cut's coming in October. But I think seeing that trend, if that holds true, we could be looking at another, like they were saying, potentially 3 cuts this year. I was thinking 2, but with that data, I think it's very likely we could get 3.
Yeah. The CEO of Ford did a really interesting interview the other day. I don't know if you had a chance to see it. I caught parts of it. But Ford right now, this is interesting. Ford right now is roughly 6,000 technicians short of what they need for their dealerships. And then he was also talking about the other blue collar jobs, the electricians, the HVACs, and the others, in that there's roughly 1 million jobs openings for the blue collar work. And he was talking why are they having such trouble trying to fill these things. And, it comes back to that, I think we glamorize the white collar, professions more. But he's like, we have so many opportunities within our business, and within the blue collar, even need for factory workers, he says, has grown tremendously. So they need factory workers, they need technicians. I think part of it is a mind shift that we don't degrade these positions anymore. Some of these people make absolutely phenomenal livings.
Yeah.
Doing these jobs. Working on a car is not just the old, mechanic. You got to be smart with some of these things.
I think about the shift, right? We think and I'm on the older side of the millennials, right? But I remember growing up, if you didn't get a bachelor's degree, you were a failure. That's what was bred into my mind at my parents, college, high school, teachers, principals, or counselors. It was always you have to go to college. You have to go to college. You have to go to college. You have to get that degree. And that was I felt like we were college was important for the prior generations, but it wasn't the end all be all. And then I felt like there was a 20-year period that it's from 1995 to maybe 2010 or something, where it's if you didn't go to college, you are a failure.
Yeah.
Now I feel like we're starting to shift away that, where it's okay, there's technical schools, there's opportunities. Let's get back. Manufacturing is important. There's all these different words. But I felt during that time, all the think with your mind jobs kind of started paying a lot more. And then the manufacturing jobs just stayed way low. Anything that was with your hands stayed low salaries. And now we're seeing those lower, what was lower wage jobs before, or, the maintenance, the factory, the mechanics, those jobs. Now we're seeing those wages just jump up at much higher incremental rates than anything else.
Yeah. Yeah. I agree wholeheartedly. I mean, it's just, scarcity, law of economics. If there's less of you, you can demand more.
Yeah.
And I think they are demanding more. You look at the pay rates on some of these have gone, from, $10, $12 to $25, $35 an hour. It's a solid living for a lot of people.
Yeah.
I know my nephew coming out of school, he graduated over in Bradenton like I think about a year ago. They actually, I think, what were they telling me? Maybe 50% of his class went to trade schools. Which I thought, wow, that's really high.
Yeah.
You know? So, I mean, people are there. It will take time, but you are starting to see that shift to fill the void where the biggest voids are.
Yeah.
So, all right, well, let's hop into our Orlando numbers for the week, and we were pretty flat. Home sales stayed right at 400, same as the previous week. Inventory went up by 3, not a whole lot. Condos still in the doldrums. Don't know how to kick that one up. Would love to, but man, it's just tough market.
Yeah.
Months of inventory, we're holding right around 5 months of inventory. Over 1 million, we're still above the 6.
Mm-hmm.
And our original list to sales price, it's still holding nice at that roughly about 90, in that 92, 93 window. And then finals sitting right about 96.5. So we're seeing those price cuts happen, and you're having to do those price cuts to get the people off the bench. And I think a lot of buyers are looking at it that way. It's like, I'm going to wait, and I'm going to wait for those price cuts to happen before I go and approach that house.
Mm-hmm.
I got a client, we're actually going out this weekend, and her budget's $300,000. And for the first time in 3 or 4 years, we've actually got houses to look at, several houses to look at. And it's great. And what has happened is a lot of those, I know one of them I was looking at this morning, it started at $339,000 and is now at $299,000. That's a 10% price reduction right off the bat before we even walk in and start doing any negotiations with her.
Yeah.
So that's where I'm telling you, going back to what we said earlier, is if the investors are starting to see opportunities, it tells me that as a buyer, follow them, because they'll lead you where the market's really gonna head. Because if it's overpriced, they're not going to spend their money. They won't do it. They'll walk away and hold their cash for right now.
Yeah.
Graphically, sales again, it's kind of sitting there, slow and steady. And our inventory really over the past month has really kind of leveled out. And I expect this to probably stay pretty close in this window, going through the end of the year into January, probably holding right around that 9,000 level, somewhere in that ballpark. Then our condos, here we are, 11 months worth of inventory. Man, if you want a condo, you are in the driver's seat. Take full advantage of it.
Yeah.
I would even negotiate, them paying 6-7 months worth of your HOA fees.
That's not a bad idea.
Yeah, something like that. Keep your cash in your pocket.
Yeah.
And something I've got to look into, and I want to talk about next week, is this proposal. We've seen some pretty interesting proposals coming out of the Florida government recently. Not only the removal of the property taxes, but also outlawing HOAs. Yeah,
I haven't heard about that one.
Yeah, I've got to send you the information on that. Yeah, talking about outlawing HOAs. I'm like, that would be an interesting one, because there are definitely pros and cons to HOAs.
Yeah.
But I'll tell you, a lot of people I talk to, when they ask me to set up searches for homes, can you set up a home search with no HOAs? It's like,
I can.
You're going to be an older house,
Yeah.
And then you got to look at the how the HOA is set up. But I mean, it's incredible. Like I helped a friend of mine set up the rental for property in the Springs over here in Longwood.
Yeah.
They have a master, then they have a condo. Neither one talks to each other. the total HOA is $953 a month for the HOA fees between the two.
That's
well.
insane.
Then you've got to pay $150 to get approved for the condo HOA. Okay. All right. And then you have to pay $754 to get approval for the master HOA and get a parking pass. That's why we need to look at HOAs.
There should be more regulations there. That's insane. That's absolutely insane.
Absolutely insane. And how many times have we seen where HOAs have foreclosed on people for non-payment of their fees too?
I mean, I remember I was on an HOA board, and this was, back in a while ago, 2012. But I got on the board because I just felt like I was being harassed for stupid stuff, like, my being told that my fence that backed up to a conservation area was needed to be replaced because it wasn't in good enough condition. And I'm like, it's up. There's no holes. There's no broken. Like, why am I like, and then being slapped with a fine for it? And I was like, okay, well, I'm going to take a look. And I remember sitting on that board, and they were, talking about this was like the dues were like $300 a year. And they're like, this couple is 3 years behind on their dues. We're going to take them to foreclosure. And I'm like, you're filing foreclosure for $1,000. This is dumb. And I was like heavy opposed to it, but I was the only person that was probably like, I brought the average age down by like 25 years on the board, I think. and it was just a complete waste because I was like, they're going to do what they're going to do because I'm outvoted. And I'm like, this is not the way to handle things. Like, but that's the way, and you'd sit there and be like, all right, well, we're chasing $300 a year in dues. And now the person's got $7,000 in attorney fees for, and it's like, well, no wonder why, like, the only person winning is the attorneys.
Yeah.
In that one. Like that was it. And I just feel like the HOAs had too much control or power. And I think that's what, basically what you're saying is they're trying to get away. I don't know if banning it. I think there just needs to be more regulation.
Yeah. I know what they passed a few laws about, the documents that need to be available and stuff like that. Cause I'll tell you, that's always been one of the hardest things with getting through a closing is trying to get it. I have one next week, and last month, guess what? They changed management companies.
Yeah.
And no one knew, no one could find the number. It took me, 2-3 days to actually figure out who it was.
Mm-hmm.
Then they didn't return a phone call or an email for another 2 or 3 days.
Wow.
And it's like, well, I need to have this information so we can close. Come on, help us out here a little bit. Mm-hmm. I'll tell you, they can be extremely frustrating to work with.
Yeah.
So, all right. Well, thank you for joining us. We look forward to seeing you again next week, keeping you up to date on everything national and local in the Orlando area that you need to know to help you with your real estate decisions. Thanks again, Joe. Hope you're feeling all right. Not too sore.
We'll get there. We're going to get there.
All right. Take care. And please like, subscribe, and join us every Thursday. Have a great day. Bye-bye.